There's nothing more depressing than losing money, trading short in a bull market at an all-time high, watching everyone else make money while you suffer losses. Here on this channel, I can help you avoid that situation. We always work with technique and strategy. Yesterday, I did warn you guys about the possibility of another bear trap in the SPY and QQQ. And today, we have another example of why we are so annoying. It is precisely because we know how to trade based on technical evidence instead of gut feelings, beliefs, right? What I think could happen, that we can avoid traps like this one. Yesterday was a terrible day with strong indications that we could see a top signal, but as usual, I did warn you to wait for technical confirmation, and only the loss of our support levels could trigger a real top signal. Well, that did not happen, and today we see a complete rejection of yesterday's candle. So let's see what to expect from here. Welcome to the Finance Hydra channel. My name is Nathan. Welcome to another daily analysis video. Yes, yesterday we had a top signal here on the SPY, a top signal here on the QQQ. The QQQ was even more dangerous because we saw a frustration, a rejection of this resistance level. We did a new all-time high, but we lost momentum, closing below this resistance area. So yes, the QQQ was even more delicate. However, I told you guys, only the loss of our support levels, namely the 21-hour EMA along with today's low, that could bring a sharper pullback ahead on the SPY, QQQ, on their daily charts. Okay, today we see that this 21-hour EMA was absolutely respected both on the SPY and QQQ. The SPY failed in reaching its 21-hour EMA, and we kept going up. At any moment, we lost yesterday's low. At any moment, we lost the 21-hour EMA. Therefore, no top signal was triggered, and by rejecting yesterday's candle, by breaking yesterday's high, we completely destroy any bearish possibility for now, okay, as of today. Okay, with the information we have today, with this candle on the SPY ETF, no, there is not even the slightest top signal right now. But Nathan, what if in the future we see the SPY making a bearish candle, losing the 639 again, losing today's low again? Could that be a top signal? Yes, of course, in this case, we could see a top signal. However, again, the future does not exist. We don't know if this is going to happen or not. If you want to cheer for the SPY to drop, okay, be my guest. But for now, there is not a single technical top evidence, okay? Top signal. There is not a single bearish evidence on the SPY ETF yet. So, in this case, where is SPY's next resistance level? Since we are breaking the previous resistance level, making a new all-time high, SPY is supposed to retest the resistance line of this ascending channel, which I also described to you guys yesterday. Yesterday I told you guys, by breaking this line over here, SPY could easily seek this resistance line again, okay? Because after all, we are inside an ascending channel. We are ascending. We are going up. We are still very bullish. And this channel is, I never share my personal opinions over here. I rarely do that. I always describe what's happening right here, right now. No biases, no opinions, just facts and charts. Now, fact, SPY is bullish. Not my opinion, SPY is bullish. So in theory, our next resistance level is this key point over here. There is not a single top signal. If we see a bearish reaction losing the 639 again, okay, then we may rethink about this bearish case. This bullish case, and wonder if the SPY could reach its triple support level again, made by the 630, the 21-day MA, and the support line of this ascending channel. All right. And by the way, only the loss of this triple support level on the SPY ETF could technically reverse the medium-term trend on the daily chart, making a sharper correction on the weekly chart, as I also described to you guys in detail yesterday. Okay, so these key points are critical for us medium-term wise. However, for now, there is not a single top signal suggesting a pullback to this support level. The QQQ is also maintaining the bullish bias. 574, that's the key support level. As long as we see the QQQ above this support level, this purple trend line is our next technical target, okay? The resistance line of this ascending channel. That's where I see the QQQ next. We are very close to it already, okay? So yes, this is the most likely scenario for the QQQ as far as I'm aware, in the absence of technical evidence proving the contrary. Okay, for now, everything is under control. We are still fine maintaining the bullish bias. Nvidia, however, now here's the trick, okay? Here's the catch. Nvidia is not following the QQQ. Nvidia is still below the 183. Okay, it is still below this resistance level. We have yet to see a clear breakout of this key point. So the situation is still quite delicate on Nvidia. See, this key point was a top level here, top level here, top level here, top here, and top here again today. We failed in breaking this key point again 4 times, okay? We retested this key point 4 times, and so far we have yet to see a breakout. As I told you guys yesterday, this seems to be a trap zone, all right, between this ascending 21-hour EMA and this resistance level over here, which is squeezing the price more and more. Eventually, we're gonna see a breakout either of this 21-hour EMA or the 183.30. For now, there is no clear breakout yet, okay? We did try to break it, but in the end, we closed above this 21-hour EMA, so no clear breakout yet. If we see a downwards breakout, Nvidia could retest our next support area near the 21-day EMA and the 174. An upwards breakout could make Nvidia explode to higher levels because, after all, we're gonna make a new all-time high. So I do not see any clear target for Nvidia if this happens. Of course, we can always focus on round numbers like the 200s. Okay, hang on. Like the $200 area, which is a round number, a psychological key point for Nvidia. So this could be our next technical target. But for now, guys, Nvidia has yet to make a clear breakout. Remember, real trading is reactive, not predictive. Wait for the breakout instead of trying to bet on the direction of the next breakout. We don't know yet. We don't need to know in order to trade well, in order to be consistently profitable traders. Only by waiting for confirmation, we can avoid most of the market traps over here, like the ones we did identify on the SPY and QQQ yesterday, okay? It's only because we always wait for confirmation. We wait for the materialization of a real top signal, of a real bottom signal, that we nail the best movements together. Okay, that's precisely why. And yes, we can help you to avoid falling into traps like these and teach you how to trade with technique and discipline. You can trade with me and become a member of our 5% project, the Finance Hydra channel initiative that has been helping traders all over the world for years now. There you will receive exclusive content, analysis, signals, and trading strategies following our risk management method. With us, you can trade in peace, following strategies designed by me, which have helped hundreds of traders to make money and achieve their much desired consistency. It's a free service to try out. We don't charge you anything to get to know us. Cancel whenever you want. Do not miss out this opportunity and learn how to become a consistently profitable trader with us. The link to my website is in this video's description. Join our Telegram channel over there. Okay, see if you like it. Again, free to try. Now, Tesla, this one over here is making a hanging man candle pattern, guys. A hanging man pattern, more often than not, is a bullish continuation candle pattern. And this goes against the common belief that it is a top signal, okay? Why it is a bullish signal more often than not? Because on the 1-hour chart, when we analyze the short term, we see this ascending 21-hour EMA. Today's drop seems to be just a pullback to this 21-hour EMA, which coincidentally is at the same price level of this support line, which is yesterday's low, around $334. So we have a double support level on the 1-hour chart, and I did warn you guys about this support level yesterday on our video, okay? So this movement is not surprising at all. Now we are bouncing off this key point. Now here's the catch. If we see Tesla losing the 334 along with the 21-hour EMA, then and only then we may see a top signal on the daily chart suggesting that it could make a sharper correction. Why? Because we're gonna see a lower high, lower low, reversing the uptrend on the 1-hour chart. We see guys, for now we only see higher highs, higher lows, okay? If we see a lower high, lower low, that's going to be a break of this sentiment. It is going to reverse the uptrend. What's more, we're going to lose a double support level on the daily chart. On the 1-hour chart. While on the daily chart, we could trigger yesterday's shooting star candle pattern, okay? Making a classic top signal on the daily chart after reaching this resistance level around $338. Okay, so that's going to be the perfect storm for Tesla to make a sharper correction, maybe to the 21-day EMA or even to lower levels. Either way, for now, we are maintaining the price above these key points. All of these support levels are still being respected. Okay, so for now, there is no particular reason to worry about how Tesla is going to behave in the future because, guys, we don't know. We don't need to know in order to trade well. If we lose this double support level, okay, sharper correction ahead. If we don't, all right, it is going to maintain the bullish bias. It is already bullish, okay? It is just maintaining the bullish bias. All right, so that's how I see Tesla. And if you ask me, I see Tesla actually retesting higher levels from here, even if we see a medium-term pullback, because guys, a medium-term pullback, it is not gonna be enough to technically reverse this bullish bias, okay? We just made an upwards breakout of this triangle candle pattern. Chart pattern, okay? So Tesla has everything to keep going up, unless we see technical evidence proving otherwise, meaning, again, the loss of the critical support levels I'm just describing to you here in this channel, in this video, okay? Now, AMD, guys, AMD over here is above the 21-day EMA, maintaining the bullish bias as usual, right? We see just a sequence of higher highs, higher lows, okay? Now, we are making a new low. And now the question is, will we maintain the bullish bias? And the answer, by standard, is yes, okay? However, the loss of our support levels could make a technical reversal. In this case, the loss of this 21-day EMA could technically reverse AMD, making a lower high, lower low, rejecting the previous uptrend, making a top signal on the weekly chart right below the 174 area. This key point is very annoying for AMD, and seeing AMD struggling a lot to break this area is quite suggestive, okay? It is a dangerous signal, all right? So we gotta be very careful with this 174 key point. Only the breakout, only a clear breakout of this key point could resume the bullish bias. Okay, so if you ask me, yes, we have decent chances of performing well, of continuing the bullish bias. However, we gotta see a clear upwards breakout as soon as possible in order to maintain the bullish bias. Otherwise, this 21-day EMA is going to be decisive, okay? If we lose it, you can expect a sharper correction at least to the 147. Okay, so these are the key inflection points for AMD right here, right now, that you should pay attention to, okay? And by the way, remember to subscribe this channel if you are still not a subscriber, because we are here every single day talking about the most important inflection points on many stocks: SPY, QQQ, Nvidia, Tesla, AMD, Palantir, etc. So you are more than welcome to join our community here. Daily videos, guys, every single day, describing the main inflection points, keeping you guys updated on what's the best regarding technical analysis, price action, trading strategies. Okay, so subscribe and click the like button if you are enjoying this video so far. And we see Palantir. Here, Palantir made a phenomenal bear trap as usual, right? I told you guys yesterday, guys, only the loss of this $182 area could bring a sharper correction, okay? To be more specific, 181.92, which is yesterday's low, which is still above the 21-hour EMA, because we saw this pullback over here to this moving average, and right now we are just bouncing off this key point. Now you may say, but Nathan, this could be a spooky, scary double top chart pattern, right? Yes, but again, wait for confirmation. Wait for the damn confirmation. Only the loss of this key point is going to technically trigger a double top, because for now we don't know if it is a double top or not. Maybe it is going to be just another bullish pivot point. Maybe tomorrow we're going to break the $188 and make another all-time high. Okay, we don't know. We don't need to know the future, all right? So 182, that's still our main inflection point, okay? Are we still above the 182? Yes. So no reason to worry. We are just maintaining the bullish bias. But we are far away from the 21-day EMA. Yes, but that's not the point, okay? That's not enough to technically justify a pullback ahead, okay? We see Palantir way above the moving average multiple times, like here, okay? Right here, over here, okay? Imagine if we saw people panicking. We are too far away from the 21-day EMA, we gotta correct. Well, that's not true, okay? We may go up even more before another pullback, okay? So guys, let's not try to predict what's going to happen next. Let's focus on the key points we always describe to you guys here every single day. We did avoid many, countless bear traps together over the past few months, okay? So guys, please, let's observe the technique, okay? Let's follow the strategy, let's follow the plan. It is precisely when you try to predict the future, when you trade predictively, we are far away from this moving average, we got a pullback. Okay, we gotta correct. No, we don't. Okay, only by trading strategically we can avoid these traps. Okay, only by doing that. If you like these ideas, again, remember to subscribe and click the like button to support this humble community. Now, guys, I gotta warn you guys about gold. Okay, gold is making a pullback right now. If we see Now, if, okay, that's a big if we see the SPY, QQQ correcting, probably gold is going to fly from here. It's going to recover and make a phenomenal bottom signal where near the 21-day EMA, which is totally flat, by the way, okay, because gold is inside a congestion as far as I know. All right, we are just sideways over here, but I do understand that by making a bottom signal near this 21-day EMA, gold could make another rally to the $317 up here, to the resistance level of this ascending channel. I'm so sorry, of this congestion, okay, sideways congestion. All right, so it is one of the stocks that I have on my personal radar right now. But guys, again, remember, there is no clear top signal on the SPY yet, and there is no bottom signal in gold yet as well. We do see some stabilization above a support level, but that's still not enough. Maybe that's gonna be another bull trap, and we're gonna see gold collapsing to the 300s again, as usual, okay? So for now, I gotta confess that yes, this one is one of the stocks that are on my radar. It is a promising one, but we gotta wait for technical evidence to confirm our ideas, to confirm our thoughts. Meanwhile, we see Bitcoin performing very well and Bitcoin performing very well, trying to reject yesterday's shooting star. Okay, that's very nice. We are heading towards the all-time high again. However, guys, what if we see Bitcoin losing yesterday's low? Then and only then we could trigger a technical top signal suggesting a sharper pullback, maybe to the $112,000 again. Okay, that's a real possibility. But for now, as long as we stay above the 118, as long as we stay above the 21-hour EMA, no sharper pullback is supposed to materialize. In this case, Bitcoin-related stocks are supposed to perform very well. We see Coinbase going up nicely on the 1-hour chart above the 21-hour EMA, okay? What's the key point over here? $334. Maybe there is the idea of a head and shoulders chart pattern, right? Of course, not investment device, please, but we do see technical evidence confirming that yes, Coinbase could perform very well from here. What's the inflection point? $334. Only a clear upwards breakout of this key point along with the 21-day EMA could technically reverse this bearish sentiment, making Coinbase fly to higher levels, maybe, just maybe, right, to close this gap. 376, okay, that's a very nice idea, okay, not advice, not recommendation. Remember, if you want to trade with me, join our Telegram channel in order for you to understand how to use risk management in conjunction with technical analysis to avoid traps and to optimize your trading, maximizing profits while mitigating losses. We are here for you. Thank you so much for your audience, my dear friends. See you guys tomorrow as usual. Stay safe. Bye bye.